Well, great. Welcome to the LPG Shipping Panel. My name is Ben Nolan. I'm with Stifel. Hopefully you can see me okay. I'm working off of my iPhone here. Also, incidentally, I do have the coronavirus, so it's a good thing we're not here in person. Um, but nonetheless, hopefully I will have to do a little bit of talking, but not too much so you don't hear me cough. We're very pleased to have a broad base of panelists here covering a number of areas within the LPG world. Specifically, first from Poten, we have Zahid Afzal. You're going to have to correct me on that one. By the way, I saw that you're Nagy, which I think is fantastic, as am I. But and then John from I'm just going to go real quick here. John from Dorian, Jens from Exmar, and Ulrik from Avance. Collectively, these represent some of the biggest LPG shipping companies, and in Poten, one of the biggest LPG think tanks in the world. And so, collectively, I think this is a very good opportunity to really understand exactly what's happening in this very volatile and chaotic world. So with that, I think we'll I wanted to turn it over just first to Zahid to maybe lay a little groundwork. What are we looking at with respect to underlying changes in the world as a function? Well, first, maybe back up. Let's frame this as, what did the world look like a month ago, 2 months ago? And then how has that changed now from an LPG perspective?
Thanks, Ben. Greetings, everyone. Before we learned about this, we were actually having a good year for the LPG market. The rates were high, exports were growing, especially from the US. And we had a pretty solid growth in seaborne exports and production from the US, as you all know. But since then, we have been constantly updating our forecasts as the information is fluid, the virus is spreading rapidly in different regions. So if we start with where it started in China back in, right before their New Year holiday. So usually that time of the year, Chinese demand goes down, but since they extended the holidays and we started to learn that how it's widely spreading, we had to change our forecast drastically. So since our January forecast, we have since lowered Chinese demand by roughly 2.5 MMT, which currently we're forecasting Chinese LPG demand will be roughly around 62.3 metric tons for 2020. As a result of that, we have also lowered Chinese import forecast by roughly 2 metric tons for 2020, which is currently forecast a little over 24 metric ton. Just to be let you know, this doesn't mean we are actually decreasing overall demand and imports in China. It's still gonna go up year over year because there is several plants that are supposed to come online in China this year. There's like three PDH plants and LPG-based crackers that are supposed to come online this year. So we have pushed some of those projects few months because of this, as we hear from the plant owners, but still, they're still expected to come online this year, and that will have significant impact of Chinese demand going forward. But if the market recovers very slowly, which is the case right now, we expect Chinese demand to recover very slowly, then because of what's going on globally now, because there will be less demand. If things gets worse from where it is now, there could be some more revisions coming in. But if we look at overall demand in Asia, the revision is a little bit less than what we see in China. It's we have lowered overall Asian demand by 1.5 MMT. And the reason is, even with this virus spreading, and there is some upside in some countries where LPG is being used as cooking fuel. Like India, for example, recently announced they're going to go into a 21-day lockdown, but they are forecasting demand will actually go up because people are staying home and as a result, demand will go up. And Indian refiners are actually preparing to produce more LPG because of that, the state-run refineries. And now the virus is widely spreading into Europe and somewhat in Mediterranean region. And pretty much all those countries who are major consumer of LPG in terms of autogas, they're shutting down, like, in somewhat lockdown measures. So now we have revised our forecast and demand in the Europe and Med. So what we see that in Northwest Europe and Med, we are lowering our demand by roughly 1.2 metric ton from where we were seeing it a few months ago. So right now we expect combined Europe and Med demand would be 46.9 MMT, and sea imports would be lowered by over half a metric ton to 28.6 MMT. And the reason what we see is Turkey has announced some containment measures, Poland, then Italy, all of these have been hit hard. And these are all major autogas consuming market. So once you don't see any movement in the private citizen, there will be a huge drop in autogas demand in these few countries in the coming months. And Europe and Med combined has roughly 11 metric ton of autogas demand on an annual basis. So market expectations is anywhere between 20 to 50% drop in the coming month. And you'll also see lower demand in the summer driving season, where people usually would drive more, but the long-term effect of this coronavirus and the economic recovery will most likely reduce those demands as well, somewhat in the summer months. So another thing I would like to also focus is US production, which has been also hit hard, not only because of the demand in oil, but also Saudi Arabia's decision to increase production and exports. There's been a lot of questions we got that how would US production of LPG will be impacted because of low oil price. I mean, we have revised down both LPG production and export out of US because of that, but we are not expecting that it will actually drop. It will still grow, albeit at a lower rate than what we are forecasting before. And the reason is there is a wave of new fractionators coming online in US in the next 2 years, which would add roughly a third of fractionation capacity in the US from where it is now. We also have, we also expect that, a gas recovery, even if oil production goes down, gas recovery would be higher because that is being flared right now. So even with a lower oil production, you'll still see associated gas being recovered at a higher rate than where it was. So considering all those, we still expect US production will go up the next 2 years, as well as exports. So what we saw, last 2 years, annual basis, US production from gas plants went up 13% per year, reaching roughly 74.7 MMT in 2019. In 2020, the growth rate is expected to be around 7%, and 2021, 4%, and which would bring US production to roughly 83.4 MMT in 2021. And as far as exports goes, we revised lower US export from 46.3 MMT to 45.7 MMT for 2020. And the revision is much higher for 2021. The reason is we were expecting more export growth in 2021 after Enterprise, Targa all finished their expansion projects on the terminal-wise. So there was a little bit more production growth, export growth expected in 2021. So the reduction is much higher in 2021. So our current forecast says exports would drop from 51.9 MMT to 49 MMT for 2021. So those are the broad revisions we have done, and probably would change as more information comes in. We learn more about the changes in the markets.
Okay, so collectively, if you could maybe put a bow on all of that, how, just for, let's say, seaborne trade purposes, Do you guys have a view on a percentage basis as to how much the market is expected to grow in 2020 and 2021 on a revised basis?
So like in number wise, so 2019 global seaborne export was roughly 108, what we estimated. It will still go up to 117 in 2020. So it's still growing at a reasonable rate. And for, let me see my, for 2021, overall seaborne trade on a global basis, we see that it's going to go to 122 MMT. So the growth rate for the world for 2020 is 8% and 5% for 2021.
Okay. Well, that doesn't sound nearly as bad as maybe just about everything else in the world is been here lately. Just appreciating that maybe you don't have an axe to grind. I would imagine that the ship owners on board here can't be too disappointed with those numbers. Any thoughts from I don't know, John, Jens, Ulrik, as to how they're viewing the underlying supply and demand dynamics?
Well, this is music in my ears. If this is correct, I guess what you're worried about is the downside risk on these numbers based on what's going on. And I guess it's also a question about pricing. Where is this product going to go? And particularly U.S. arbitrage situation, whether that's still going to be open, or we need some price adjustments to be able to do that.
And let's not forget that LPG is fairly inelastic because 60% of the total demand is usually residential use, heating, home heating and cooking. So that's not going to change. Actually, the softness in the pricing is going to help countries that depend on this. So we see that this demand is going to continue nonetheless, assisted, of course, with a lot of other reasons, which is government subsidies, softness of price, and also the convenience of the people having already at their home LPG. They're not going to change. So I think that's an important factor to remember.
Yes, and here from Avance, I'm on the same team. I think it's good to de-dramatize the whole situation a little bit. We are naturally worried about the developments across the world, as we all are. But I think that once you start drilling down in the numbers, of course, the near-term fundamentals have changed, but the long-term fundamentals are not as impacted as it may seem when you look at our share prices across the board.
Great. Now, that said, I think clearly in this market, the primary focus of all investors is downside risk. And maybe Zia, if I could circle back to you and say, okay, based on sort of your current assumptions, where is their downside risk? What could go wrong that maybe the market is concerned about? What if oil prices were to say go to $10? Would that have a much more draconian impact on sort of underlying shipping demand or something along those lines? Or do you think it's already your numbers are already relatively fully accounting for some of that downside risk?
No, that's the base forecast, what we're saying. But a prolonged downtrend in oil price has a little bit more effect on at least on the production side for US. The thing about the shale production is they have a very high production rate in the initial 2 years. So even you have drop in oil price now, even when independent producers in the Permian, they pull back on rig count, you're still going to see a high production in the coming year or the next year as well, because they also have the uncompleted wells that they can tap into, even though they're not drilling any new wells. So that's what keeps production stable for a while. But if you have a long-term downside in oil price, that's when you're going to see sharp drop coming in in the long term. That will have a longer, so that's where the downside risk is. So nobody knows what the Saudi Arabia will decide. Like so far, what I understand, they don't plan to keep producing at a high rate forever. I mean, I guess negotiations is ongoing. So that's yeah. There's definitely a big downside risk if oil production stays high at a prolonged period of time, and you see low price for a long period of time. But as of now, even with lower drilling activity, you're going to have production at a reasonable steady state for at least a couple of years. That's what we have seen in the previous downturns.
Okay, so if there's any downside risk, it's probably more on U.S. production relative to underlying global consumption or demand. Is that a fair assumption?
On the consumption side, yes, because in the Asian market is slowly recovering. We don't see a huge China's is recovering as we speak. Indian demand is subsidized, and it's residential demand. Rest of the Asia, a lot of it is residential cooking demand, and there's more plants coming online, which are already being built. So they're supposed to come online as it is, where most of the demand is supposed to come in the coming years, like petrochemical PDH demands in other parts beside China. South Korea as well, they have a lot of expansion projects that are on the chemical side. So the issue is, yeah, there is another downside is if we hit a global recession and overall petrochemical demand is significantly hit, that's where some of these petrochemical plants might have to reduce their operating rates to cope up with the drop in global demand. So that's another downside risk on the demand side as well.
But
Okay.
so Zahid, I have a question for you. Is because what you're saying is short term. The risk is not in the US for this year and next year, but the short term then is more the OPEC production and Middle East. If you see, because the oil production today is, if I believe what I read, 7 to 10% too high compared to consumption. So if they saw this cutback, then in the short term, the next 2 years, that's where we could have the hit on the production side. Is that right or wrong?
Yes, on the if there is a prolonged reduction in drilling activity, you're going to see some effect on the production side.
Mm.
Okay, so that said, I think so far, at least based on what I've seen, the LPG shipping rates have held up reasonably well, despite demand interruptions and lower oil prices. Can anybody, and I'll leave it wide open, can anybody sort of eliminate what the state of the market is right now? What's the appetite from your customers for the use of your ships, and are there any interesting trading patterns or anything of that sort that you see developing that's helping keep the freight rates relatively tight here?
Can I take a stab at this?
Sure.
First, just coming back to what I said before, the need for residential and commercial use of LPG will continue and continues. Number two is that there are the tariff exemptions that came into force by China on US LPG, US sourced LPG. So that might be taking place right now with cargoes already going to China, maybe within March, even maybe early April. And thirdly, the Chinese PDH plants have come back from an extended, if you like, spring kind of holiday stopover, and actually some of them were out for maintenance purposes, etc. So they have come back very strongly. They have a very high utilization currently. And also the ARB has been very helpful for those PDH operators in China. So all these factors have helped in maintaining the market quite buoyed and strong as we can see it.
Yeah, and I can add that of course the fact that Saudi is pumping a lot more tons out has seen a lot of activity in the Middle East, which obviously has supported what John is saying, created a lot of activity in recent weeks. We have seen it straight away from when the announcements were made from Saudi that they were going to pump more. We have actually seen the tons coming on LPG out straight away, which at least to me was a little bit of a surprise that it went so fast, but it did.
But there's no doubt that the VLGC market has kept up very, very well. But we also have to keep in mind that the fact that it's still close to $50,000 a day is a lot due to the bunker price having come down substantially over the last few months. I think that's $500,000-$600,000 equivalent on a monthly basis. That we have kind of had the benefit from the lower bunker price. So that's you need to keep in the back of your mind.
Interesting. Okay. Sorry. So with all of that said, again, I think the market right now and investors are more interested in minimizing their downside risk. And as they had mentioned, right now things look relatively healthy and maybe not as good as they could have been, but still not terrible. But there might still be risk, and there are certainly uncertainties in the market. I'm curious among the ship owners how they're positioned, just in case they're wrong. What if day rates were to fall to $10,000 a day and stay there for a year? How would your company handle that? And is that part of the calculus that you're exploring, just as an abundance of caution here?
Well, if I start, I mean, we have a very different position because with Exmar we have 81% of our mid-size carriers already committed on period charter. So our downside is very limited, and as an overall position in Exmar, we have almost all assets covered for this year. So I'm not the right one to answer this question compared to my peers here in the VLGC segment.
Ben, I don't think we've seen $10,000 since 2009. Okay, in 2018, 19, 17, 18, we had low rates, but definitely not in the $10,000. But every company looks and stresses its own balance sheets and makes sure that they can survive for a period of time of low rates, as you kind of suggested in this hypothetical situation. And all I can say for our part, for Dorian, is that we have a very conservative balance sheet with very low leverage. Actually, we are the lowest leveraged from all the other companies that are in the same field. And we have made sure that we would not issue any equity to dilute our shareholders, so we have not done any of that. And actually, we've been doing buybacks to help with that. Now that the situation is a little bit better with the finances, and also we are in the business for a long term, and we always watch our balance sheet very, very carefully and try to avoid overextending ourselves, just exactly for this situation of a bad market.
Yes, and for Avance, I can say we have around 8% covered of our fleet at 40,000, which of course gives us some safety net. We also do not expect 10,000 per day, given also, and I think that supported what Zahid said initially. Naturally, again, we also would be looking at stress testing our organization and have done so, particularly in the early days when it was very unclear what's going on. It's still not 100% clear what's going to happen, but more things are clear. We have a strong balance sheet as well and a strong cash position. And we have, unlike Dorian, we elect not to buy back shares, but pay out dividends. And we have done that actually this week. And this is also a statement of how we believe that the market is going to hold up. So, of course, one should always be careful in situations like this. But even should the market drop to 10,000 a day, we have quite a long way, a runway to before we get into trouble. So we are confident about that.
Are any of you doing anything differently? I know you mentioned you paid a dividend, Dorian buying back shares. Are there any, are you, as we have seen in other industries, some people drawing under revolvers just to make sure that there's plenty of liquidity, or doing anything out of an abundance of caution just to, just to make sure that there's absolutely no, or you're doing whatever you can to minimize downside risk?
I think that speaking for Avance at least, but maybe it also goes for the other owners, I think we would probably like not to leverage up, but we would probably rather go out and take time charter contract as a way of hedging our risk, so to say. That would at least be the view from Avance.
Managing our balance sheet is very important to us, and that's what we're doing. The reason we're doing buyback shares instead of dividends is because we find good value in our stock, especially at these current rates and levels. We'd rather buy back shares than pay money out. I think it's an interesting way of thinking about it, especially when your stock is so much lower than your actual NAV. And I think that gives a lot more value to shareholders than giving a dividend out as a one-off bonus from liquidity. So that's generally our approach, and the conservative balance sheet is the other. Thank you.
Okay.
Yeah, I think our view here in Avance is that we think that it should be the shareholders' decision as to where they want to place their money. So if they want to replace the money that they get in dividends back into the company because we are undervalued, they're welcome to do that. If they want to keep it in their pockets in an uncertain situation like today, they can do that.
Great. Okay. Well, I'll let you guys decide that amongst yourselves. But I do want to sort of go back to the market a little bit and say, okay, obviously for VLGCs, your primary, well, really only moving LPG, propane, and maybe occasionally butane. And you guys with the mid-sized vessels carry a little bit wider variety of cargoes, or at least potentially could. And maybe also, Zahid, are there, aside from, let's just say, pure LPG, are there any views on some of the other products that are sometimes carried by LPG vessels, usually the smaller ones, but be that petrochems or ammonia, or sort of what are some of the tangential trades looking like or developing?
You know, we trade about 2/3 LPG and 1/3 ammonia. And it's obviously been over the last few years, it's the LPG trade that has really grown, while the ammonia trade has grown more modestly. But we're seeing over the next few years that the ammonia trade will grow a little bit more than what it has done over the last few years. So to us, that's obviously a substantial product that we carry. We don't do any petrochemicals the way it is today on our ships. But you know, what we've seen is that some of these, at least smaller semi-ref ships, have really been struggling, and that has been a very, very difficult market situation. And I think people have been expecting a lot of US ethylene exports, which has not yet happened, and there's a lot of tonnage built for that has been suffering. But maybe Zahid has some more input on that.
I would expect, like, you know, on the ship owner's perspective, they have like a little more insight on that. I personally don't, we haven't been tracking that much like how the smaller class, because our focus in our team is mostly on the VLGC side, and obviously there's no flexibility on that segment. But yeah, a lot of the new build ethane carriers, they are more versatile. They like, but it depends on like LPG in general. It goes in a certain, and ethane are usually supposed to go in a certain fixed route. So it's very hard to, I would say, to combine multiple products. Even though we're going to see more trade on the ethane side.
Okay.
And yeah, I would just add also we have 10 pressurized vessels, and that the market improved from 17 to 18, but last year it was a little bit disappointing, coming off a little bit, and so that's been a bit of a disappointing trade, and it's also a market that's a little bit difficult, and people seem not to believe in it too much because the order book is basically zero, which is a bit of a unique case for any shipping segment actually.
Okay, so now shifting back a little bit to maybe the pure, well, VLGCs, but also the mid-sized ships, and you had mentioned that the majority of your mid-sized carriers have time charter contracts, but could you maybe, really all of you, talk through what you're hearing from your customers? Is there a demand from your customers for period time charters? Yeah, is there been any change at all, and other than maybe the method of communication, and in the dialogue that you're having with your customers and their need for capacity?
If I start with the mid-size, I mean this is really a time charter market. The spot market is fairly limited compared to the fleet size. I mean the fleet is slightly below 100 ships, and so the spot market is very limited. But you know we continue to see deals done in $800,000 to $900,000 a month range, which is substantially improvement from a substantial improvement from last year, when the rates were 500 about a little bit the same time this year or last year, sorry. So we continue to see the trade moving, and we continue to see some interest from potential charters at these kind of levels.
Great, John or Ulrik, any color from what you're hearing with respect to your customers?
Because we operate a pool called Helios LPG, we see quite a lot of activity, not only on the spot markets, but also in time charters and contracts of affreightment. But we do have the opportunity to keep a lot of ships spot, some ships on term business, and some others to cover certain contracts. So we kind of see everything happening, and it's certainly an improvement in the markets, because the market has stayed fairly supported and at higher levels, and charters have actually traders and charters have started to come into the market and seek shipping cover for a continuation of this market, because it looks like it's going to be continuing for a reasonable time, the strength in the markets, in the LPG markets as such. So yes, we're seeing interest, and it has been at healthy levels.
Ulrik, the same from you?
I think we have seen over the last couple of weeks the traders being very focused on the product markets and not so much on taking coverage. Maybe they quote John instead of us. I don't know. But we have seen what can you say, a little bit less TC talks. That said, the VLGC market is not always as liquid on the TC front, so it's not. I wouldn't say it's been something out of the ordinary on a big scale. And that said, there are actually, as we speak, TC inquiries in the market. but the uncertainty has, at least for a couple of weeks ago, muted discussions a little bit. But it seems as if maybe it's coming back on, as also John is saying.
Okay, great.
Zahid, I have a question for you. You know, with the pricing the way it is, and there's been some rumors that or talk about people canceling liftings in the US. Do you see a short-term downside risk, or are you fairly confident that it's going to stay fairly firm the way it is today?
No, like you're right. Because of relatively in the U.S. market, the ARB is kind of shut right now. And there has been discussion of cancellation because on paper, on calculated basis, the ARB is not working right now, and the premium on the FOB premium that we call it, it's less than where cancellation is supposed to happen. And there has been discussion. I haven't heard any yet, but there is expectation there could be some cancellation if U.S. price doesn't come off or the freight rate doesn't come off. Or the best case scenario, Asian prices has to come up, but based on what downstream petrochemical prices are, it's highly unlikely that Asian prices will come up to open the ARB. But you're right, ARB looks pretty weak right now, which could lead to some cancellation.
So we need to believe in the Middle East.
Sorry, could you repeat
We need
that?
to believe in the Middle East.
Yeah.
So along those lines, if the Saudis keep and Russia and everybody keep it up, and at least our internal view is that they will through the rest of the year, U.S. prices have to come down. Is that correct? Yep.
Yes, I mean the steady flow from the U.S. to Far East, like prices has to come down. Let's say like it could be U.S. or whichever would yield and make our work. I mean, U.S. prices has been relatively weak, slow to respond to the slowdown in global prices. And I guess you had some late season cold weather, which probably kept prices not, I wouldn't say stable, but it didn't feel much. But we have seen sharp drops in the past week or so. So maybe it's heading to the direction, because once you start having injection during the shorter month, prices should expect it to come down, because we have more inventory than last year at this point. So once you have the shorter season, there should be increase in inventory, which should, in general, weigh on prices.
Great. No, that's helpful. And we've already been given our notice that we need to wrap it up here. But just wanted to, my perception of this is that certainly relative to the response as seen in some of the stocks, maybe the things aren't quite as bad as they appear. Are there, are there any other takeaways that that you guys would like to leave with people with respect to sort of how you think you're positioned, or how the market would is likely to play out, and how you'll do in relation to that?
Yeah, I think that what we can say, and what has also been sort of concluded today, is that of course what has happened over the last 3 weeks, 4 weeks, maybe a little bit more, is changing the world to a large degree, and it will put a dent, I think, in most of the owners' earnings this year. I think it means that we will not be as profitable as we would have been this year. On the flip side of that, what we see is normal in shipping. We have a boom and bust cycle. It's the normal way it works out. Here, we have actually hit the brakes a little bit very early in the cycle, and I think that will lead to less ordering. We see delays on new buildings, and it may mean that we can have a business that is maybe not as profitable, but profitable for a longer time. So that is sort of the way we look at it here from isolated Norway.
Great.
Yes. And I agree. I agree with Ulrik. There is a good trade continuing, and that is helpful to the markets. Even though we had a hiccup here, which we don't know how long it's going to last, but there is a demand for the product, as we said before, for a lot of reasons in China and in India and Indonesia and Japan and Korea, of course, who are the big consumers of LPG. The growth may be kind of flattening rather than stopping in LPG production. I believe that consumption is not going to be affected as we're going forward, because no matter whether naphtha may become temporarily more attractive for the petrochemical industry, I still think that LPG has a good position with the petrochemical industry, and at the end of the day will be perhaps preferred to naphtha because it always has a benefit of being perhaps a cheaper commodity, and a commodity that is attractive right now and has been put already in the feedstock of many of these plants that are already using LPG as their own feedstock. And of course, as Jens said earlier, I think the bunker prices have helped a lot, being a lot lower, to keep the rates of the LPGs really healthy. And I think that we have seen a market in LPG which is slightly in contango, trading wise. Therefore, that helps longer voyages, even from the U.S. or around the Cape from the U.S. Because this contango trade means that perhaps a longer term storage of the product might help until the market turns around. So all of these factors have helped this market maintain its rates.
Great. Well, we've been given the hook here, so I don't know. I did. Jens, did you have any last bit? You didn't have a chance to say anything. I wanted to.
No, I think, as you know, we always said that LPG is supply driven, and as long as the supply, as Zahid said, will continue to grow, we should have a good market going forward, being on the VLGCs or the mid-size. I guess but we may have some short-term disruptions here that will shake us a little bit, but longer term it should be okay.
Great. Well, thank you, Zahid, John, Jens, Ulrik. I believe that there's a way to ask questions. I'm not really sure how to do that. I'm clearly the least tech savvy of all of us here. But anyway, I did want to say I really appreciate you guys carving out time, and I appreciate Capital Link and Nicholas for inviting me to host the panel. Hopefully it was very helpful to everyone. Thank you.
Thank you.
Thank you.
Thank you.